when you think about that hyper printing, is it simply the game of devalue the currency to pay off the debt in the future with those devalued currencies? And so we can make a logical argument why we should do it, but do they not understand what the impact is, or do they not have another choice? So they do understand it, but they have no other options. They have to do it anyways.
Not to get overly political, but you do have a situation where the people who benefit most from the money printing, the quintillionaires, a term that we coined on the Kieser report, who get the money first and buy assets and who make out like bandits, they're not unhappy with the money that's being printed. Simultaneously, it would appear as though there is a trend toward reducing people's rights of movement, a right of communication, free speech. Even in some places, in Europe, for example, people are getting locked up. I don't think you can separate those two. I think this trend toward hyper printing and locking people up, it go together because they don't want the blowback. They don't want to end up like another reign of terror situation where 35,000 French noblemen got beheaded by the peasants who got tired of all the money printing and the monarchy, right? So they're aware of this. They're like, wait a minute, we don't want to do that. So let's just lock people up and print all the money anyway. So they're out of control, basically. I mean, I don't think that's a wild statement. I think that would be, historically, we've seen this before, and economically, we see this happening now. And we also, there's nobody who's in a position to write policy that's making any intelligent comments or choices about this at all. I haven't heard a single person make any intelligent comments about what really would need to be done.
So when we think about the current situation, we've got 6+% CPI inflation. We've got 4 to 4.5% unemployment. There's 11 million open jobs in America. There are 80% of Americans that are already being paid over $15 an hour. And we've got this public health crisis, which continues to fluctuate in terms of, I think, the severity of the public health crisis and which areas in the country are or are not worried about it, which seems to be bleeding into monetary fiscal policy. How do both of you think about the current environment? They're now talking about tapering. They're saying that, oh, look, we're going to actually change this. Stacey, you're smirking. So what do you think is actually going to happen here? Do you think that they can taper at all?
They've been saying that for 5 years, 6 years that we've been covering this on Kieser Report. And every single time the headlines come out that they're about to taper, we always tell people on Kieser Report they're not going to taper because you can't taper a Ponzi. So we've said that for the last 6 years. They'll continue to say it. And it seems to work, at least temporarily, to the markets respond, the dollar soars. Everybody thinks, they're going to taper for real this time. But they're never going to. And how can they? How can they, right? Like there's more debt than ever. So they can never taper that Ponzi scheme.
When you think about interest rates, are we going to see nominal negative interest rates in America?
I think we probably already have them, right?
We already have negative real rates.
Yeah.
We already have negative real rates.
Oh, nominal.
But do you think we'll see the actual negative rates? Like you'll literally go and they'll say the negative rate is, negative 1%?
When they are ready to just give up. Because if they do that, then the dollar's toast.
Yeah.
We had a little taste of that during the 2008 crisis. Remember, there was this talk about we can't break the buck. Mm-hmm. The money market funds out there, which they're not cash, right? It's short-term debt, all money market funds. And there was a threat that they would go under $1, the official rate. And they did everything that was humanly possible, including, remember, you had Tim Geithner and others go in front of Congress and say we need just under $1 trillion. Congress said, we need to read what the document is. And they said, okay, look at it tomorrow. Market crashed that night. And then they came back and they signed it. And that led to 16, 17 trillion in various bailouts and credit facilities. So I think that rather than go negative nominal on the actual rate, I mean, they just keep going extraordinary printing.
I think actually I realized you could see it in the news, basically, the geopolitics over the past few months is like there seems to be some sort of tension really building, escalating rapidly with China. They'll do nominal rates and they'll blame China. They'll say we had to do it because of China, and they own all this debt of ours, and they own, so much of our bonds and stuff like that. So they'll say they had to do this because of China, and China forced their hand. The fact that all these Chinese companies are going to have to delist from the New York Stock Exchange and stuff like that. I just think there's like some sort of building, the Thucydides trap is real and it's happening. And this is the moment. They're going to use that as an opportunity to say, we need nominal rates. And if you're a patriot, you'll support this because this has to be done.